Hello, welcome to Tehele Founders podcast. Tehele Ventures is a Silicon Valley-based venture capital platform that helps startups in the US and across the world find investors and raise capital. To discuss his Tehele experience, today we have an investor in the venture capital world, Prasanna Kumar. Normally we have startup founders come and discuss their experience, but today we're going to talk to an investor on the platform. He will discuss his investment preferences, what type of companies he invests in, and how Tehele features on the platform have helped him identify the right investments. Hello, everyone. Please welcome PK Kumar. It's my pleasure to talk with you today.
It's such a pleasure to be part of this podcast. Thank you so much for having me.
Absolutely. So you're an investor on Tehele platform. Could you tell us what types of companies you invest in?
Most of my focus predominantly is in healthcare and also in FinTech. That's where predominant focus is on the portfolio that I help manage.
Mm-hmm. And do you prefer pre-seed, seed investments, or maybe Series A and higher?
Series A is my focus area for 2026, 2027.
Mm-hmm. Got it. So let's talk about some of the features on the platform. What do you think about the features that the Tehele platform provides? Any thoughts on that?
I absolutely loved it. The ease of use of the platform, the onboarding time, the tools for both startups and investors, the match engine that allowed investor match as well as founder match. Those I found it pretty interesting and useful. And above most importantly, it's not the technology; it is the ability and the ease at which you can get on board with the platform. I think that's been really a superpower on that platform. A good,
Mm-hmm.
nice little secret sauce. I loved it.
Thank you. You mentioned investor and startup matching. As an investor, could you expand a little more and explain why without the platform it's usually difficult to get those matches that eventually lead to an investment?
Yeah. One of that one of the key points that I outline in my speeches and panels is in US and especially in California and within California in Bay Area. Everyone now has, or specifically in Bay Area, everyone now has a gas car, a EV car, and an AI company, and they all want their AI company. They're very smart. They figured out that they need to. There is no concept of job security. Maybe moving forward, even if they have one, it's going to be very difficult. So they needed to have an AI company for their future prosperity. However, getting an AI startup funded um, in this peak of inflated expectation and is going to be a bit of a challenge. So they need platforms. They need double-sided network effect, and that would help in terms of identify, hey, um, for my company and my trajectory of growth, who is the ideal partner, a VC, an angel, and early stage venture capitalist, who would be the right entity for my growth? That's a question that it is not possible to do that standalone. It's important to join hands, and it's important to have a platform. So, and your platform, Tahel, does offer that, and it's important to have one in your pocket, in your mobile phone, in your web. So it offers those features. So for that reason, yes, it's important for startups to have these capabilities, these toolkits, and and having it on a platform provides you the double-sided network effect. So it helps them to get to that funding requirement or get to the legal assistance, or rather find the directory for the legal accounting and various fractional resources that are available out there. A platform makes the process painless.
Mm-hmm. Thank you for sharing that. And as an investor in Silicon Valley in the Bay Area in California, You've had a chance to hear a lot of pitches from startups, I can imagine. Could you share some of the most common mistakes that startups make when they pitch their companies?
Though there is a lot of capital out there, but these capitals are now available for very specific resonance frequency. Unless a startup tuned to that resonance frequency, they're not going to get. It's very similar to a FM radio. You turn frequency to 98.3, you get music. 98.2, it's garbage. 98.4, it's garbage. Not going to get it. Many are not able to figure out that frequency and aligning to the needs of the investor.
For those startups that are on Tehele platform, do you have some advice for them to how to stand out so that they could get attention of an investor like yourself?
Absolutely. Um, I would refrain myself to advices, because nobody really likes advices. This is the truth. So what I would do is I would give recommendations, because recommendations, good suggestions, good insights are very, very valuable, and they also would, all the startups love it. First recommendation: the purpose of any business is to produce this residual return called profits. Um, and nothing more, nothing less. So first focus must be on profits, because if there are no profits, no contribution margin, you cannot pay back on the debt. But having said that, there are, apart from return on investments, which is for which contribution margins are necessary, and what is also a huge opportunity space is return on equity, because many organizations, many startups may not give return on investment, but they might be able to give very good return on equity, which is in terms of the perceived value and also the ability to keep raising capital. That is also an important skill. I'm not saying it's good or bad, but that's also a skill of value, because there is a stored value in that process itself. If you have a CEO who is very, very good at raising capital, he or she is going to be very good at raising capital, then that's an organization that it has a capacity to pivot, but it's not going to run out of cash, which is most of the reason why organizations, startups especially, fail, big or small. That's one recommendation that I would do. So focus on contribution margins, profits. But in cases where you are not able to get to profit quick, at least be good at raising capital round after round, and do that in such an efficient fashion that you are able to have your investments into generating cash flows, and that can keep your organization staying power much higher.
And as you know, on the Tele platform, there is this emailing system where investors initiate the conversations first with startups, and this helps to avoid that problem where you as an investor get a bunch of emails, especially now with AI. It's easy to automate that, so this helps you filter out the noise and focus conversations only to companies that you're interested in. How do you like this system, and what's your experience with that?
For Tehele founders who are on the platform is to use the platform towards getting that attention on the platform by speaking the language that the investor is wanting to listen, and while aligning your products and your capabilities and your roadmap to the roadmap and investor thesis of the investor. So a platform like yours, with emailing and the ability to have communication channels going back and forth, helps you kind of like what I earlier mentioned, like getting into the resonance frequency and getting into that alignment to that exponential curve.
Thank you. And let's say, as an investor, you're already interested in the company and you are doing due diligence on a particular startup. Are there any red flags or common mistakes that you tend to identify in companies like that?
I don't see them as red flags. I see them as just opportunity missed by these startups. Especially they try to focus and sell on what they have rather than what the market needs. So I see the product market fitment as a gap, product founder fitment as a gap. Sometimes the founders are the right people to build those products. And then founder market fit as well. So these are three fitments that I see as gaps. Won't call it red flags, but call them as opportunities missed. If you ask me to go and swim with Michael Phelps and try to outperform him, I can do that. I can do that. But if you give me you give me a calculator, I can do taxes for you. I mean, uh, I won't do it, but I'm just saying my areas and skill sets are in terms of looking at numbers, margins, and value, volume, and velocity, and how the demand that exists and quantification of that, risks associated with those opportunities, and how to take advantage of that and do it in a safe, ethical, responsible fashion, and be sensitive to others' needs. So these are specialization that I do, and help build it into a good organization, kind of institution building process. But if you ask me, put it something else, and do something on the sports side of it. No, I'm not. I'm not the right person to do that. So I should stay away from it. But most startups don't. Today, if you really look at many of the startups, the backgrounds are quite different from what they wanted to build. That's a huge, you can call it, yes, you could, to an extent, you can call it a red flag, because the transfer of expertise is completely lost. They might get excited and then they end up even making a good shiny object, but converting a shiny object into path to production is a huge challenge, making it resilient, making it reliable, making sure that they don't have downtimes, and making sure the customer is ultimately happy, because customer doesn't care about whether we are 30 under 30, whether how much fund you have raised. They only care about whether the product that you said will deliver actually delivers. Does it do the job it promises? Will you keep the commitment that you made in the timeline that you had promised? So these are essentially around promises, commitments, and trust is where most startups do fail. If I have to stretch it to call it red flags, these are the red flags.
It was my pleasure to talk to you today.
Absolutely, Dan. Thank you.